is the president of Jones Management Consulting. He specializes in the establishment of captive insurance companies and pools for the public sector associations. He advises associations, insurance companies, HMOs, and public sector clients in design, implementation, and administration of healthcare programs. His services include feasibility studies, strategic planning, plan comparisons, plan design, and program implementation and management. He currently serves as Deputy Administrator for the New Hampshire Interlocal Trust. Mr. Jones has been the claims manager for a third-party administrator, designed software systems and flexible benefits cafeteria plans. Mr. Jones received his BA in philosophy from Colby College in 1987. He has earned the Certified Public Employee Benefits Specialist designation and the Associate in Reinsurance designation. He has served on the President's Advisory Committee for the Alliance for the Mentally Ill for New Hampshire, is a licensed hot air balloon pilot, and past president of the Balloon Federation of America. And most importantly, Mr. Jones partners with Al Jones and has been the ACCG's consultant on managing the group health benefits program since 1997. And with that, everyone give a warm welcome for Mr. Rick Jones. Rick?
Thank you, Ben. It's a pleasure to be here today. We're going to jump into the ACA reporting. There's two important components to reporting. And ACA is the Affordable Care Act, also known as healthcare reform. It's two important components. The first is on the W-2 reporting plan costs. And the second, where we will be spending most of our time today, is the Form 1095 and the related forms to it. So starting with the W-2, this is not a new requirement. Most of you had to do this last year. And if you issued 250 or more W-2s last year, so just go back and count, and if you did 249, you're off the hook. But if last year you gave out 250 or more W-2s, you have to report the total cost of the health plan on the Form W-2. And you'll see on the right-hand side, in box 12, I've written code DD, which is the healthcare cost, and the number 12,799, which is what I guessed your health plan cost. Again, you had to do this last year. It's the total cost of the health plan that goes here. It doesn't matter how much you paid or how much the employees paid. It's the total cost of the plan. And if you have a self-insured plan, there are specific rules on how you determine that, but basically it's like COBRA. This is informational only. It's being put on the tax reforms to show employees how much the health plan costs. But in a few years, when the Cadillac tax comes along, it's going to be incredibly convenient for the IRS to have this information. So moving on from the W-2, the new reporting, the real challenge coming at you very quickly here in January are the forms 1095 and 1094. For all employers with 50 or more employees, this is required. And this is the same method of counting all health reform uses, where we're going to count full-time equivalents to add up to 50. So anybody with 50 or more is a large employer for everything we talk about today. If you are less than 50 employees, but you are self-insured, you are also required to file this form. If you like to read the tax code, these forms address tax code section 6055 and 6056, which have to do with your requirement to offer good enough coverage and your requirement to make it affordable coverage. A lot of people wanted to put this information on the Form W-2. The IRS rejected that because the W-2 is half a page and these forms are about 3 pages, and they just couldn't figure out how to fit 3 pages onto that other half page. The 1095 is due in January 2016 for calendar year 2015. It does not matter when your plan renews. This is a calendar year report, just like the W-2. So why, when you see what you have to do and you look at the whole thing, you're going to ask, why do we have to do this? Why are we going through so much hassle? And the reason is health reform has a bunch of moving parts, and they need a way to sort it out. The first is there's a requirement that employers provide health insurance to their employees. If you have 100 and more employees, you're required this year to be offering it to 70% or more of your employees to avoid a tax penalty. And next year, anybody with 50 or more employees is required to be offering it to 95%. So that's one thing they're trying to sort out. Are you meeting that requirement? Another one is every person in the country is now supposed to have health insurance. And if they don't have health insurance, there's a penalty. And it's 2% of household income, or $325, whichever is more, this year, and it goes up next year. So they have to figure out if individuals have health insurance to know if they should tax them. And then the exchanges that sell health insurance to individuals that are kind of the center point of this project, health reform, make subsidies available. And lots of these subsidies would be available to your employees if you didn't offer them health insurance. About 80% of the people on the exchanges are getting subsidies, but there's cases where the subsidies need to be refunded. One of them is they forgot when they filled out the form they had health insurance and claimed a subsidy or offered health insurance at work, because you're not eligible for a subsidy if your employer offers you health insurance. And some people also maybe forgot how much money they make when they filled out the form, and by putting in a lower income, you get a bigger subsidy, and all of that has to be paid back to the IRS when they file their tax reform if it wasn't done properly. So with all these moving parts, the IRS wants this reporting information to sort out if the employer and employees are doing what they should and if the amount of subsidies were accurate. So here's how the IRS plans to do this. All the individuals will send in their Form 1040s, typically by April 15th, unless you're me and you file for an extension every year. Then they're going to cross-index that with the exchange subsidy records. They're going to take these 1095 forms you're filing. They're going to take the 1095 forms the insurers file, and they're going to sort it all out and figure out who had health insurance, who didn't, what employers offered health insurance, what ones didn't, and who owes taxes. And for the individuals, they'll get even with them on their 1040 refunds. But for employers, their plan is once they get all the returns, they sort this out, they will send the employer a notice of people where they think there's likely to be a tax due by the employer. So you'll get this notice at some point after April 15th, once they have all the tax returns. And they'll say, these are the people we think you might owe a tax on, and you will have an opportunity to respond to that. Unless you like paying taxes, I would encourage you to take advantage of that opportunity and let them know, no, we offered this person health insurance, or no, they weren't an employee, or whatever the case was. And then after that's done, the IRS is going to send you a notice, and they have a charming term for it. They call it a demand to pay. So that's kind of their process of how this will happen. They have not published the timeline for this, other than to say it will happen after they receive the individual's tax returns. So when do you have to comply with this? What's the schedule for getting this done? The reporting dates, Form 1095C or 1095B is due to employees by the end of January. It's the same schedule as the W-2. And then the 1094 forms are due normally at the end of February, but it falls on a weekend, so it's going to be March 1st this year. So this is the exact same schedule as the W-2 and the W-3, and it's going to stay that way every year. You should have started collecting data to go on these forms last January, and knowing how all counties have a lot of extra staff sitting around looking for data tracking projects to do, I'm sure you've all got a huge data warehouse of this information, but it's going to be a fair amount of work if you have to start right now doing it. So who has to comply with this? Well, first, any employer with 50 or more full-time employees or 50 or more full-time plus full-time equivalent employees has to file a Form 1095 and 1094. If you're a small employer, if you have less than 50 employees, including adding up all those full-time equivalents, but if you're still under 50, you do not have to file this form unless you're self-insured. So if you have 25 employees, including full-time equivalents, and you're fully insured, you do not need to file the 1095. You do not need to file the 1094. You're good. Just sit back and enjoy the cruise on this webinar and smile about all the stuff you don't have to do. And if you're at 49, take notes on why you are not hiring one more person no matter what. Insurance companies also have to file this. Medicare, Medicaid, CHIP, the exchanges. The IRS is trying to create a giant dragnet where anybody who has health insurance, somebody reports that they have that health insurance. So that's the purpose of this, is making sure that no matter what's going on with the health insurance, somebody reports it. So what are the forms? What do they look like? Well, these are the forms we're going to be talking about today, the 1094 B and C and the 1095 B and C. If you look on the right-hand side, or whichever, there's the GoToWebinar stuff has handouts, and some of these forms and their instructions are in the handouts. You can also get them from the IRS website or Google them. The handouts are the actual ones downloaded from the IRS website last night to make sure they were current. And you may find it helpful to have printed out a copy of these forms to look at while we're talking about them to help keep yourself focused. This is zooming in a little on the form 1095. There's a lot to this form. We're going to go through how you fill it out and what everything is in just a minute. There's several general sections. We'll come back to them in a few minutes. So what's the difference between the different forms? The 1095 B or C is sent to each individual. It's like the W-2. So every full-time employee you have, and some other folks, especially if you're self-insured, are going to get a 1095 B or C. The 1094 is more like the W-3. It's a summary form that is sent as kind of a cover sheet with all the 1095s when you send them to the IRS. So there's going to be a lot of 1095s. You have a 1095 for every employee at least, and there's going to be one 1094. So it's much simpler. Which one of these do you file? If you have 50 or more employees, you're going to file the 1095C, which will also result in filing the 1094C as its summary. So most of you are going to be doing 1095C. The 1095B is used by insurance companies. If you're Blue Cross or Aetna or Kaiser, you're sending out a 1095B. But small self-funded employers, those with less than 50 employees, have to use Form 1095B. And insured, if you're fully insured and you have 50 or more employees, your employees are going to get two forms. They will get a 1095 from the insurance company, and they'll get a 1095B from the insurer, and a 1095C from you, the employer. So the county will send a 1095C, Blue Cross will send a 1095B. I'm sure this won't be confusing at all to employees. They'll be happy to get all these cool new forms. So this is the 1095B. We'll come back to it towards the end. This is the one the insurers will be sending to any insured employee. And it's very similar to 1095C, but what it does not have is it doesn't have anything about the offer of coverage or what the plan costs, because that's not the insurer's concern. The 1095C, on the other hand, which is the one most of you will be sending out, has a big section in the middle called Part 2 that's employee offer and coverage. So this is the form we're going to concentrate on for most of this webinar. It is the one you're going to send to your individual employees. And I want to point out a few parts because we're going to zoom in on this in a minute. Note that at the top right here, we have this cool section for corrections. Part 1 is the employee and employer name. Part 2 is the employer offer of coverage. And then Part 3 is where covered individuals get listed. And notice this section about if the employer provides self-insured coverage. We'll come back to that as well. So how do you fill this out? First, let me back up 1 second, cover a few more points. Every large employer will be sending this form. You're going to send it to all your full-time employees. If they're a full-time employee for even 1 month, you have to send it. And again, a full-time employee on health reform is somebody who worked an average of 30 hours a week for a month. So anybody who worked 130 hours in a month is going to get this form. So you're going to be sending out an awful lot of these. And if you're self-insured, in addition to your employees, you're going to have to send this form to anybody else covered on your insurance, such as retirees or some folks on COBRA. So this form goes out to everybody on your plan if you're self-insured. It's only going out to somebody who's a full-time employee for a month if you are fully insured. So how do you fill it out? Let's zoom in on the parts. So part 1 is the employee information. This will be the same as from the W-2. It's pretty straightforward. Name, social security number, address. The rest of part 1 is the employer name. This would be the name of your county, your employee ID number, and it's again the same information as W-2, except you'll see I've circled box 10 on the right, contact telephone number. This is a telephone number for employees who have a question about this form to call, and somebody will explain it to them. Now, if there's somebody you really don't like in the payroll department, you should put their direct line here. I'm sure that these forms are so simple, straightforward, and clear that none of your employees will have a question why they got it or if there were any mistakes made on it. So it's no big deal to have your phone number here, as long as you really like talking to employees. So part 2, this is the fun part. This is where it's going to be the most work for the employer, and this is different than other things. So on the left-hand side here, on the left-hand side here, we have box 14, 15, and 16. We'll spend a bunch of detailed time on those. You see, for every box, it has a choice of all 12 months, or then it has January, February, March, April, on through December. And if the information on an employee was exactly the same for all 12 months, you just fill in the all 12 month box. But if it varied for even 1 month, you leave the all 12 month box alone and you fill in all 12 of the other boxes. And folks get confused on this, but in almost all cases, you will fill out every box once you start filling them out. And an example where people get confused is if you have a new hire or termination, it's obvious that you fill in the box when they work for you, but you also fill in the box when they don't work for you. And there's codes for things like not an employee that you would use when they don't work for you. So the codes will vary from month to month for a lot of employees. Some employees, your favorites, are going to be boring. They've been there 10 years, nothing ever changes with them. You can use all 12 months. But especially hires and terminations, you're going to have to fill it out month by month and go through it that way. The instructions for doing all this are one of the handouts on the right there. So, going a little bit more detail here, line 14 is your offer of coverage. This is where you show the IRS that in fact you offered this employee coverage or you didn't, and there's lots of good reasons why you might not, like if they didn't work for you, why would you offer them health insurance? So line 14 is for showing what your offer of coverage was. Line 15 is where you show how much that coverage cost, and you only fill line 15 out in certain cases we'll get to in a few minutes. Line 16 is where you explain why you did what you did in line 14. So for example, you might not have offered them coverage in line 14, so in line 16 you will explain you didn't offer them coverage because they weren't an employee or whatever your reason is. So line 14 is who you offered coverage to. Line 15 is where you show what it costs in certain cases. And line 16 is where you give the reason you don't think you owe a tax on that person that month. So going into those in more detail, line 14 uses something called Code Series 1. All of these codes start with a 1, which is why they came up with that clever name, Code Series 1. And in the instructions, these are all listed out in quite a bit of detail. And the employer has to show what they cost. You're going to enter a code for every month, even if they're not an employee, and you only enter one code per month. In a lot of cases, it will look like several codes apply. You're going to pick your favorite one, and page 9 and 10 of the instructions, if you want to follow along there, is where they are. And they tend to give these codes much more complicated names in the instructions. I've attempted to give them names you'll be able to follow. So the first code, which is quite different from the others, is code 1A, qualifying offer. And when we get to the form 1094C, there's a bunch of confusing boxes that refer to qualifying offer, and they are really referring back to whether or not you use this code 1A. So code 1A, qualifying offer, you can only use this if the annual cost for your cheapest single plan you offer this employee is $1,108.65 or less, which is $92.39 a month. So if your plan costs $93 a month, just forget about this code, and that's for your cheapest single plan you offer this employee. And you must have offered that coverage to the employee, spouse, and dependents, but we don't care what the extra cost was for the spouse and dependents. If you qualify for this offer, you're going to save yourself some work down the road, but you have to be fairly generous to do that. So this is kind of a special offer. The $1,108.65 is 9.5% of the federal poverty level. So that basically they're saying if you are at the poverty level, this plan would be affordable to you. And again, it's $92.39 a month is what that translates to. That's 1/12 of that number. So this is a great code to use if you happen to qualify. So those of you who have free single coverage, this will work for you. And again, you're not going to fill in the cost information in line 15 if you use this code. For those who can't use the code and you offered affordable coverage, you're going to use one of these next codes, 1B, 1C, 1D, or 1E. And if you only offer coverage to the employee, you're a 1B. If you offer coverage to the employee and the children, but not the spouse, you're a 1C. If you offer coverage to the employee and the spouse, but you don't like children, so you don't offer them health insurance, you're a 1D. And if you offer coverage to whoever is involved with that employee, the employee, spouse, and or dependents, then you'd be 1E. So for most of you, I expect you just use code 1E here if your coverage is available, regardless of if they're single or married or so forth, if you offer to everybody. If the person happens to be single, you can still use code 1E because you're offering it to a spouse and dependents. He or she just doesn't happen to have any spouse or dependents currently, but they might change that in the future. So again, these codes 1B through 1E said you offered affordable coverage. And on line 15, we're going to ask you to prove that. So the other codes, 1F, 1G, 1H, 1I, are for cases where you either didn't offer them coverage at all or the coverage was limited in some way. So 1F, you offered coverage, but that coverage wasn't affordable. And the coverage could be offered to the employee and spouse, just the employee, any combination. So 1F is you're offering coverage, but for whatever reason, it's not affordable according to that 9.5% of income rule. 1H, you did not offer them coverage at all. This is very common if they're not an employee, for example, or if they're in a waiting period. 1I, you're using the 2015 transition relief. So if you are a fiscal year plan, if your renewal was in, say, July or September, and for the first 6 months of the year, you did not offer some folks health insurance, but the reason was you weren't required to until the renewal, you would use code 1I to indicate you didn't offer them health insurance, but it's because you were using the transition relief. And then code 1G is a little different from the others. This is only for self-insured plans, and this is saying you offered coverage to this person, but they're not a full-time employee, and they weren't a full-time employee for the entire year. If they were a full-time employee for even 1 month, you're going to use one of the other codes. But so this is for folks like, you might have some retirees who didn't retire during 2015. You might have somebody on a board of directors, a spouse that took COBRA, or you might have an employee on COBRA who went on to COBRA in 2014 or before. Again, if they were a full-time employee at any point this year, you don't use it. Again, code 1G is just for self-funded insurers. Others don't use that because you don't have to send these people a form if you're insured. So we have, on our line 14, we have code 1A, which is you're very generous. You beat the poverty line affordability. 1B, C, D, and E mean you're doing what the government wants you to. You offered affordable coverage to this person this month. And then 1F, G, H, and I means you either didn't offer them coverage or it's limited in some way. And there's lots of good reasons for that, like they're in a waiting period or they didn't work for you that month. So getting to line 15, this is the employee cost information. It's how much the employee share of the single plan is. You're going to use your cheapest single plan that's offered to this employee. How much would it cost an employee to be on it for that month? And again, this tends to change during the year. When your plan costs, you get a cost increase in July, that might increase the employee's costs. You might have one cost for 6 months and another cost for the next 6 months. You only do this if you use codes 1B, C, D, or E. If you use 1A or one of the codes that comes alphabetically after E, do not fill this line out. Leave line 15 blank in that case. If you use, though, code 1E, for example, and the single coverage is free, which is a great deal for your employee, don't leave it blank, enter 0.00. They want to know that the cost was 0. And this is the amount the IRS is going to compare to the income of this employee they get off the Form 1040 to decide if this really was affordable coverage to that employee. So it's important you get this information right. And if you have more than one plan, make sure you enter the cost of the cheapest plan here. I want to back up to line 14 and talk about a difficult situation, which is folks who are on COBRA or going on COBRA. Some very tricky transitions happen with these people. First, you only report COBRA coverage if they choose COBRA. So while you're offering them COBRA and they haven't signed up yet, you would report it as no offer of coverage if you didn't know yet. If they don't sign up for COBRA, it continues to be no offer of coverage. So if you offer them COBRA, but they don't take it, it's no offer of coverage. If they take COBRA, then it gets reported as they are taking the plan. So that's fairly confusing to folks. Also, when you're hiring somebody new, there'd be no offer of coverage for the period up until they actually go on the health plan. And for these codes, they have to be on the plan every day of the year. So if you gave them coverage on the 10th of the month, that's still no offer of coverage because it has to be for the full month, unless somebody's a part-time employee. And there's all these interesting challenges. If they're part-time, any day of the month you offer them coverage qualifies as offer them coverage. So to clarify, when somebody's first hired, they'd be a 1H right up until they went on the plan. And when they're terminated, they'd become a 1H again, unless they went into COBRA, and then they'd be listed as offering them coverage. And the 1I you would use, in that first 6 months if you want to offer them coverage. Okay, so line 16. Line 16 is really all about because. This is where you explain yourself. And in line 16, these are the safe harbor codes and other relief. This is how you're proving to the IRS you figured out it was affordable. You're only going to use one code per month. No matter how many apply, you're going to use a code for every month unless none apply. So if you leave line 16 blank, it's because you think you are probably taxable for that month if this person got a subsidy. So if you choose to leave line 16 blank, it's sort of like leaning into being taxed. Now there's cases where that's appropriate, you just don't offer somebody you should affordable coverage, but leaving this one blank is asking to get a tax bill. This is page 10 and 11 in the instructions is where line 16 is discussed. And if you hire somebody in the middle of the year, you're going to give them a code for all 12 months of the year, even though they only work for you for 5 months. So here are the codes. The master code is 2C. I know it's not in alphabetical order. If the employee is enrolled in the coverage, always use code 2C. Basically, the IRS figures if they took the coverage, it's affordable. So 2C is our master code. Check it first. If they're enrolled, they are a 2C. However, if they happen to be on COBRA and they're a terminated employee, don't use code 2C, use code 2A, because we need lots of exceptions to keep this entertaining and keep consultants fully employed. So moving through the list, and again, I'm not going through these in alphabetical order because I don't think they make sense in the order the IRS put them, so I'm putting them in an order I can explain them better, I hope. So this next group are ones where you offered the person affordable coverage, but for whatever reason, they didn't take it. Maybe they took the spouse's plan, maybe they had some other coverage available to them, maybe they worked 6 jobs and they liked the other health insurance better, but you offered them affordable coverage and they didn't take it. And so you're going to explain why it was affordable coverage, how you determined that. And so code 2F means you use the W-2, the Form W-2 safe harbor method. And this is where you compared the amount in box 1. You made sure it wasn't more than 9.5% of the income. Okay. 2G is use the federal poverty line safe harbor, and that would mean you're at that $92.39 or below cost. If your plan is free for employees, 2G would be an easy choice. And 2H means use the rate of pay. You compared their monthly salary, if your plan is and it was affordable. For employees, 2G would be an easy choice. Just a second, please. Compared their monthly salary. Okay. The next set of codes, line 16, are ones where you offered. Well, you didn't necessarily offer them coverage. You either didn't offer them coverage or you haven't yet offered them coverage or it wasn't affordable. So 2A, somebody wasn't employed this month. So if you have a new hire in the middle of the year, they're going to be 2A for quite a while until you do hire them. And if they leave your employment, they're going to become code 2A again. And this is why if somebody's on COBRA, use code 2A. They're on COBRA because guess what? They don't work for you. You're going to use code 2B for somebody who's not a full-time employee this month. So if somebody's Hamlet and they don't know if they're 2B or not 2B, they're a part-time employee and you use code 2B, and that's why you didn't offer them affordable coverage. And again, not full-time means less than 30 hours a week. Code 2D, limited non-assessment period. This one is extremely confusing to people on what exactly a limited non-assessment period is. Most of you would probably call that a waiting period. For up to the first 90 days after you hire somebody, you might not give them health insurance. You might wait a month after they're hired to give them health insurance. So after you hire somebody, but before they are on the plan for a full 30 days, they'd be 2D, put them in a waiting period. If they're only covered for half the month, I would use this code 2D. If you're using a look back period or you have a variable hour employee and they're in the initial measurement period, again, that's 2D. It's a limited non-assessment period. So waiting periods, or that up to 1 year period where you're trying to figure out if somebody is or isn't a full-time employee, they are code 2D. And then 2I is fiscal year transition relief. This again is if you're a July renewal, the first 6 months of this year, you weren't required to offer somebody affordable coverage yet. So that would be a 2I, assuming you cleaned up your act and did offer them affordable coverage in July or whenever your renewal was. So 2A, they didn't work for you. 2B, they didn't work full time this month. 2D, they're in some sort of waiting or measurement period. 2I, the first half of the year. And then there's also a code 2E, which won't apply to most of you. But if you have employees that are in a multi-employer plan, and usually this means you have union employees that are in a Teamsters plan or some other large group where you don't control the health plan, but you make a monthly contribution or something towards a health plan run by a large union or other multi-employer group. There are special rules that apply, and 2E is for those multi-employer plan transition relief. You should, if you have employees in a plan like that, you should talk to that multi-employer plan and ask if you should use code 2E here and how you should be reporting this. But certainly talk directly to that plan. They're not very common down here, but there may be a few of them. And 2E is sort of a master code as well as 2C. If they qualify for 2E, we really don't care which of the other ones they belong in, but you'll need to ask them. So those are our code 16s. If we jump back up here, we can see where all those fit together, 14, 15, and 16. 14 was saying you offered them affordable coverage. 15 was in some cases showing how much it cost. And 16 was explaining how you determined that was affordable, even if it was just that they took the plan. Which brings us to part 3. And the most important part of box 3 is that first line that says, if employer provided self-insured coverage, check the box and enter the information for each covered individual. If you read that backwards, if you are fully insured, do not check this box and do not complete line 17 and after. So if you are fully insured, your work here is done. You do not complete part 3 because your insurance company is going to complete this information and send it to your employees on a 1095B. So for the fully insured groups, just skip part 3. You don't do any of it. If you are self-insured, however, you need to complete part 3. So check that box and let's keep going. So on line 17, you're going to put the name of your employee, and then you're going to put their social security number in B. And then again, we have these check boxes, and we have a choice of covered all 12 months or month by month. If this person was covered on the plan for all 12 months, you can just check the all 12 month box. If, however, there was a change for even 1 month, ignore the covered all 12 month boxes and fill out each individual month one by one. And if you check the box, it means they had health insurance. And then on line 18, you put their spouse, and on the lines below that, you'd put any other dependents. If you don't have the social security number for some of these people, you're supposed to request it at least once a year for at least 3 years to try and get it. But if you don't have the social security number, it is acceptable to put the date of birth instead of the social security number. Do not put both. The IRS does not want the social security number and the date of birth. They want one or the other. And so you put the employee, spouse if any, dependents if any, and you keep going, which eventually brings us to the question, What if you have a lot of kids? What if they're named Martha and so forth? Well, the cool part is there's another page to this form, and if lines 20 through 34 allow a whole mess more dependents. And if you have more than that, I'm not sure what you're supposed to do if you have more than 20 kids, but I suspect you just keep stapling more forms on. So this back page is for people who have more than 4 children because there's 6 lines on the front of the page. And then on the back of this form are instructions to the recipient. You probably should read these if you're the person whose phone number appears on the front of the form, because your employees will be calling up asking all sorts of questions about them. And this is their attempt, the IRS's attempt to explain to the employee what this form means. And these are the instructions for the 1094C and the 1095C. And you'll see that they are one of the handouts over on the right-hand side. And I would highly encourage you to download them. Also, on the left here are several other pieces of information that you can look up questions. I would suggest the FAQs here explain a number of situations that I think should have been in these instructions. If you're trying to sort out COBRA, for example, the FAQ, this link listed on the left-hand side of the page, the bottom, is probably the most useful. All right, so that brings us to the Form 1094C, and this is the summary form that gets sent along with the 1095Cs. It's really the W3 version of this. Got a whole bunch of cool information here, but essentially, it's the first half of it straightforward. Lines 1 through 8 are the employer information. The contact telephone number, box 8, is who the IRS would call with questions. So that might not be the person you hate in payroll. That might be somebody who can actually understand this stuff. Lines 9 through 17, you will ordinarily not fill out. It is possible that one government entity can report for a bunch of others. And if you're in that situation where a bunch of you are reporting together for some reason, then box 9 and its information is for who's doing that. But if you're just reporting for your county, fill out boxes 1 through 8 and leave 9 through 17 blank, just ignore them. Line 18 gets into, how many forms, 1095 forms are you sending in? Is this the authoritative transmittal? If you're sending a bunch of these forms for some reason, you're going to need to read the instructions. But for most of you, that would be yes. The total number of forms you're filing, if you're only filing this once, that would be the same as above. Are you part of an aggregated group? If this usually is a problem for companies where there's a bunch of different employers who really all count as the same employer because they're all owned by the same person or something, so they put them back together there. So most of you are probably a no here, but you should probably check the instructions if you're not just simply one employer. Line 22 is where things get interesting. This is the challenging part of this form because it's got these boxes. You're not required to check these boxes, but they can get you out of doing some things if you do check one of them. So I'll start with the one on the right-hand side, box D. This box is if you offered if in 2015, for the whole year, you offered 98% of your employees, full-time employees, affordable coverage, check box D. And that will save you, when we get to the next page, from filling out the full-time employee information. So again, if you're very generous and to at least 98% of your employees this year, you offered that, you can check box D. If you recall, when we were doing the 1095, it was code 1A for where you had a plan that was better than the poverty line. So there are cases where you can check A or B for that. For A, you were doing it for the whole year. For B, you were doing it at least 1 month and basically the period after your renewal. And then you're using codes 1A. And then C, the section 4980H transition relief. You're going to check this if you're not meeting that 95% requirement, but you're counting on the transition relief. So if you have 50 to 99 employees, you don't have to worry about that till next year. Check box C. If you have 100 or more employees and you offered coverage of 70%, but you aren't at the 95% yet, you can check box C, and that says you're qualified for that relief. So these 4 boxes are very confusing to people. I think the instructions are a challenge on them, but that's what you're doing with those. When we get to the next page, note that again, line 23 is all 12 months, but if it wasn't exactly the same for all 12 months, you have to do this month by month. And some of these things, like your total employee count, very few counties have the exact same number of counties all 12 months of the year. There are these pesky people who quit, and then supervisors go and hire somebody new, and it screws things all up because you have 50 employees one month and 52 the next, and so you'll have to fill it out month by month. So box A, did you offer minimum essential coverage to your employees? And this is a yes or no box, and this is fairly confusing in a way, but if you offered it to them all for the year, for that month, check yes. If you are counting on the transition relief, you can also check yes in many of those cases as well. So if you hit that 95%, check yes. If you're using the 50 to 99 relief, or if you're using the 70% for 100 plus this year, you can also check yes, even though no would seem like the right answer. Again, remember that checking no is potentially leaning into being taxed, so you want to take a careful look. In column B, they want you to go through every month and count how many full-time employees did the county have that month. And again, if you check the box D on line 22 for the 98% method, you can leave column B blank. They figure you're so generous, we're not going to worry about sorting out how many full-time employees you had. Box C, and in box B, when you're counting full-time employees, don't count people who are in a waiting period or an initial measurement period. They don't count as a full-time employee for purposes of box B. We get to column C, total employee count. Now we want to count every employee belly button. So this is full-time employees, part-time employees, employees in a waiting period, employees in initial measurement period. This is the full employee count, and everybody has to fill this box C out. D, aggregated group indicator. If you are one of these employers that really has to be aggregated with other employers because they're all controlled by the same group, check this. I think your typical county can ignore that. And then column E, this is transition relief indicator. If you're using the 50 to 99 relief, i.e. you have 50 to 99 employees, but you did not offer this coverage to 95% this year because you weren't required to because of transition relief, put code A in this box under column E. If you have 100 or more employees and you're counting on that 70% relief, put code B in this box. And so I know this form looks complicated, but it's a lot more straightforward than 1095C, and that's how you get through it. And if you are part of an aggregated group of large employers, this is the next page where you list out who all those employers are and what their tax ID numbers are. The 1095B is the one insurers will send to your employees if you are fully insured. If you are a small self-insured employer, you will also need to send this. Large self-funded employers may use the 1095B, but only for people who were not an employee the entire year. So this would be people like retirees who didn't retire in the last year, folks on COBRA who weren't an employee during the last year, board of directors folks. because the large employers must send a 1095-C to anybody who's a full-time employee this year. And again, this is what a 1095-B looks like. If you are filling it out, Part 1 is the same as a 1095-C. Part 2 says employer-sponsored coverage. You leave that blank. That is only for insurance companies to fill. I know it says employer, but that's just to confuse you. You will always leave Part 2 completely blank, and you would fill out Part 3. You are the issuer or other coverage provider if you sponsor the self-funded plan as insurer. So leave Part 2 blank, fill out Part 3, and then Part 4 is where you fill out the covered individuals. Note that all that stuff with Code Series 1 and Code Series 2, where you show that you offered affordable coverage, is not on this form. Insurance companies don't have to worry about that, and small employers don't have to worry about that. So that's why this form is set up that way. And the 1094-B, look how much simpler that is than the 1094-C. It basically just wants to know your name, address, and if somebody signed off that it's good. And again, the instructions for this are over on the right-hand side. How you file the forms. You're either going to mail it to your employees or hand deliver it. There are rules that would allow electronic delivery, but you have to get specific written approval for every employee you're going to do that for. You have to do something that lets them prove that they can receive electronic stuff. You have to allow them to rescind it at any time, and you can't require them to do it at all. And by the time you look at all the rules, I think most counties will decide it's not worth the hassle of keeping track of and just mail or deliver it like you do the W-2. The 1094 has to be mailed to the IRS if there's less than 250 of them. But if you have 250 or more, you're required to file them electronically. Again, similar to W-3. And then kind of batting cleanup here, a few details we haven't touched on. First, what happens if you need a correction? You file another 1095 form. There is a box in the upper right corner to mark it corrected. The most likely reason to that would be retroactive coverage. Let's say in February, somebody elects COBRA coverage and it goes back into November and December. Well, you might have already filed the form. Now you have to go back and file one saying there were coverage in November and December. And there are some employees who sometimes get you information really late and you have to make a retroactive change. Again, you need to correct this form. Is it possible to get an extension? Well, in some cases, maybe. If you're filing the 1094, the summary form, you can fill out Form 8809 and get an automatic 30-day extension for filing the 1094 to the IRS. But the 1094 is the easy one. The 1095 going to all the employees, the only way you can get an extension of the 1095 is write a detailed letter, and in the instructions, it tells what that letter needs, but they want you to cough up why you can't do this. Yeah, and so you have to send a detailed letter requesting this to the IRS, and they maybe grant you up to 30 days extension on that. But I suspect they will be reluctant to do that because it makes it hard for employees to file their returns. So an extension isn't impossible, but it's probably difficult to get. Penalties. Yeah, there's penalties just like every other tax return if you don't file these or don't file them accurately. So penalty is $250 per employee for the forms you don't get to them, and then $250 for each form you don't get to the IRS. But the good news is they've maxed out the penalties. It won't be more than $3 million per year per employer. So that's good news. However, there is a section in the instructions where they explain under the penalties that good faith efforts to comply, they will give great consideration to, but not filing at all didn't count as good faith. So that's worth checking on. Now, if this all seems very confusing still, I hope we were able to simplify it and bring it into a little bit of focus for you. There is help. Members of our ACCG Health Program are welcome to call me at any time. And Ben Pittarelli and the ACCG staff, and also your Blue Cross Blue Shield representative, or if you are with another insurer, they're available to help you as well. So with that, I'd like to turn it over to if there are any questions for the program. And Ben's going to pull up some questions here.
Okay, so the first question we have is, we offer coverage to employees at $75 per month, so we could use 1A. However, we do offer spouse, dependent, or family coverage, which is very expensive. Do I put 1A or
1H.
1H or 1E in line 14?
Okay. If the funny part about the IRS regulations is they care a lot what the single plan costs, and they don't care at all what the family plan costs. So it'd be possible to use 1A. You could also use 1E if you wanted to, but 1A is simpler.
Okay. Do you have to report health plan information on the W-2 if you have less than 250 W-2s for year 2015, which is reported in 2016?
No. As long as you have less than 250 W-2s, oh no, that's a tricky question. I think it's 2014 they're looking at the W-2s for. But if you're consistently below 250, you don't have to do it yet. At some date in the future, the IRS may require it, but you're off the hook on the W-2 for now.
All right, and if the employer pays for 100% of healthcare coverage and 000 is entered in box 15, what code is appropriate for box 14 and 16?
Well, that depends on what was going on. For example, if you hadn't hired an employee yet, you're going to put in the code for no offer of coverage and not employed this month. So that it's dependent on other factors.
Okay. Any other questions? We've got a few more minutes left. If there's anything else that you want to have answered. If you don't, contact information for Rick as well as myself is...
Click over here. Was at the beginning and the slide right before this one as well.
Right here. And it looks like we got a couple more questions. Hang on one second. Nope, that looks like it might be it. Okay, thank you again for attending. We appreciate your willingness to engage in this type of, it's very dry information, but it's very necessary, and it'll help keep you out of trouble. So with that, from ACCG, thank you again.